Nvidia just lost its biggest customer, and the market hasn't fully priced it in yet. Today, OpenAI unveiled Jalapeño, its first ever custom AI chip, built from scratch, in partnership with Broadcom, manufactured by TSMC, and it's already being tested on live OpenAI infrastructure right now. Welcome back to AI Assets, your daily edge on AI investments. This is one of the most important hardware announcements in the AI space this year. And if you think this is just a tech story, you're leaving serious money on the table. Let's break down exactly what happened, why it matters for your portfolio, and what smart investors are doing right now. What is Jalapeño, and why does it matter? Jalapeño is OpenAI's first custom inference chip. Inference is the process that happens every single time you type a message into ChatGPT and get a response. It's the most compute-intensive part of running AI at scale, and it's where the biggest costs are. Until today, OpenAI was almost entirely dependent on Nvidia GPUs to run that process. That dependency is now officially over. Jalapeño is an ASIC, an application-specific integrated circuit, meaning it's built for one job and one job only, running large language models as fast and as cheaply as possible. The result? Jalapeño delivers roughly 50% cost savings compared to standard AI GPUs. That is not a small number. That is a structural shift. The chip is manufactured by TSMC, assembled with help from server maker Celestica, and the first physical prototypes were delivered to OpenAI today, with full deployment planned before the end of 2026. Layer 1. Investor context. Who wins? Who loses? Let's be direct. There are two stocks you need to watch after this announcement. First, Broadcom, ticker AVGO. Broadcom is the design and manufacturing partner behind Jalapeño. This is not a one-off project. This is a long-term strategic deal that adds a durable, high-volume revenue stream to Broadcom's custom AI chip portfolio. AVGO already jumped roughly 2% on today's news, but the long-term revenue implications are much larger than a single-day move. Second, Nvidia, ticker NVDA. Nvidia dropped slightly today, and the reaction was mild because Wall Street still thinks Nvidia is untouchable. But here's the signal most investors are ignoring. OpenAI is not the first to do this. Google has TPUs. Amazon has Trainium and Inferentia. Microsoft has Maya. And now OpenAI has Jalapeño. Every single major hyperscaler is designing their own chips to replace Nvidia GPUs in inference workloads. That trend is accelerating, and inference is the fastest-growing segment of total AI compute spend. TSMC also benefits quietly here, as the foundry manufacturing the chip, and memory suppliers like SK Hynix and Samsung supply the high-bandwidth memory that Jalapeño requires, adding another layer of supply chain exposure for investors to track. Layer 2. What the market is missing here is the angle most analysts are not talking about today. Nvidia's real moat has never been just the hardware. It has been CUDA, the software ecosystem that developers, researchers, and enterprises have spent a decade building on. That lock-in is what keeps customers paying Nvidia's premium prices even when alternatives exist. Jalapeño is an inference chip. It does not run on CUDA. It runs on OpenAI's own software stack. And OpenAI currently plans to use it internally only, not sell it to outside customers. That sounds like good news for Nvidia, but think about what it actually means. OpenAI is the anchor customer that legitimized Nvidia's pricing power in the AI era. The $100 billion investment deal between OpenAI and Nvidia was reportedly put on ice earlier this year. Now, OpenAI has its own chip in production. The negotiating leverage has permanently shifted. Even if OpenAI keeps buying some Nvidia GPUs for model training, the inference dependency, which scales with every single new ChatGPT user, is being systematically eliminated. The market is pricing Nvidia as if this transition is years away. The prototype is in OpenAI's hands today. Layer 3. What happens next? Here is your actionable roadmap for the next 6 months. Watch Broadcom's next earnings report. Analysts will be asking directly about Jalapeño revenue timelines, margin structure, and whether other hyperscalers are in the pipeline for similar partnerships. That report could reprice AVGO significantly. Watch Nvidia's next earnings call. Jensen Huang will be asked about inference competition directly. Listen carefully for whether Nvidia defends its pricing power or signals any concessions. Any softness in forward guidance will be amplified by today's news. Watch OpenAI's infrastructure announcements. OpenAI is building its own data centers, its own chips, and its own software stack. Every announcement that removes a third-party vendor dependency signals that their cost curve is improving and makes a potential IPO more attractive and more imminent. For positioning, AVGO looks like the cleaner near-term trade given its direct manufacturing role and confirmed revenue stream. For NVDA, the thesis is not broken, but the risk profile has changed. Training compute remains Nvidia's strongest position. Inference is where the challenge is growing fast. Smart investors are not going all in or all out on any of these names today. They are watching the data, adjusting exposure, and staying ahead of the next announcement. And that is exactly what we do here on AI Assets every single day. If you want to stay ahead of the AI investment curve before mainstream media catches up, subscribe to AI Assets right now and hit the notification bell. We drop fresh analysis daily, no noise, just signal. And drop your thoughts in the comments below. Are you bullish on Broadcom after Jalapeño, or do you think Nvidia's moat is still unbreakable? I want to hear your take. See you in the next one.